It's Wednesday, February 12th. Let's level up. Interesting day in the markets. We had the CPI data, which got people a little bit nervous. We saw a little bit of a liquidation break, which usually happens when you come in near reference key levels, close to highs. We often do see that pullback before a rebound. I've floated this idea that the market is in this big choppy range, and we have this sort of hidden volatility undercurrent. It hasn't really spilled over into total volatility yet, although that usually is the end stage of it. We'll have to see if VIX can get over 19.36. If it can't do that, I still think we're in this sort of hidden volatility type of a situation. Powell has made it very clear in his most recent comments at the last Fed meeting and then again today that the Fed is in no hurry to do anything here. They're not looking to cut or hike. They think the economy is okay. They're just playing a little bit of wait and see. They've already moved quite a bit. Their goal, as they had stated, was to front load rate cuts, and they did so. Now they're giving it a little bit of time to marinate, and then they will adjust accordingly if need be. As far as the ES and the NQ go, Qs are starting to lead here, but generally still lagging a little bit in terms of fib retracements. Bulls in the ES will need to get over 6100 to 6105 half. Anything below that I think is sideways with liquidation break potential, possibly down to that 6037 half to 6050-75 level, and maybe even a retest of the 6000s. As far as the Qs go, as long as the bulls can hold 21,719 quarter, I think they're fine. Next big upside resistance is 21,966 and then 22,074 quarter. As far as SPY goes, we had a pullback today. Obviously, we held the 50 MA. We are back up over the 78.6 at 601.85. I think as long as we can hold roughly 600 to 601.85, it's fine for the bulls. If they can hold the 598.74 50 MA, we're probably coming down to the 61.8 at 596.19, and likely the 50% fib down at 592.21, which may line up with the 100-day moving average by the time it gets there, currently 590.14 and rising. On the upside, I still think that 12.18 Fed day high at 606.41 up to the reference all-time high that we inked on 12.6 at 609.07 is likely resistance. Stay on guard for a look above and fails. We are often in these situations where we come up to the highs, it looks beautiful, and then we get a smackdown, and then on the lows, it looks terrible, and then we get a rally. I think there's a lot of stop running, a lot of short squeezes and liquidation breaks, a lot of games being played by market makers. As far as the Qs go, they are still not over the 78.6 at 530.71, so this is all just conversation at this point. I think as long as the bulls can hold 524.08, which is the 61.8, they're sort of still okay. On the upside, we'll likely would see some resistance at the 124 reference high at 533.79, then the 12.18 Fed day high at 536.88, all the way up to the reference all-time high that we inked on 12.16 at 539.15. On the downside, I think if we can't hold that 50 MA at 521.60 and we can't hold the 50% fib at 519.42, we'll probably come down to wherever the 100 MA is at the time. It's currently 508.37 and rising. Apple coming alive a little bit the last couple of days now that they have the deal for their AI in the Chinese versions of the iPhone, and they are partnering with Alibaba, which I think is actually a very good partnership. I think as long as the bulls can hold the 100 MA at 234.52 to the 38.2 of the range, which is 234.94, they're okay. The next big upside resistance that I see is closer to the 50 MA at 240.32 and the 50% fib at 239.74. On the downside, I think you can use the 10 MA here as a stop at 232.49. If you want to use the 100 MA at 234.52 as a pass don't pass line, I'm fine with that as well. As far as BABA, this was one of my trades for a January rally, and we're getting it a little bit later into February, but we did get it. We are coming up near to key reference levels. Anything into the 117.82 plus area I like trimming, 121.30, and channel high could be where we unload completely at 123.78 if it were to happen tomorrow. There is an anchor VWAP that is just above at 135.13, so wherever that is, if we do achieve it, obviously a full unload and likely a scalp for at least a rollback. I like doing 1/2 put ratios for a pullback. You don't usually want those to go your way right away, particularly when IV is low, because you'll have the pressure of price and IV coming against you before you have any type of time decay. NVIDIA getting a little bit of love, but our thesis of going above the 100 MA and then back below it as a short has worked so far. Remember, in the prior year, we had seen, and even early this year, we had seen moves below the 100 MA and then back up over it could be a long. Now we're seeing moves over the 100 MA and back below it as a short. Long story short, We need to clear and hold the 100 MA. Bulls would need to clear 135.13 and at the very least 133.07, which is the 50% fib of the range from the all-time high at 1.7, where we sold on 10 cents near the all-time high, and down near the 2.3 low. That range, the 50% fib, like I said, 133.07. Amazon was one of the good ones post-earnings, but it's still a little iffy here. Bulls will need to clear the 20 MA at 233.37, and they will need to hold the 50 MA at 227.06. Basically, inside that range, I think is neutral, above bullish, below short. Google got nailed on earnings, continues to pull back. I've been hoping for the 12-9 gap fill at 175.37 to start selling puts on the fives, 170, 165. If you want to do 1-by-2 put ratios, playing for that, or 1-by-1 if you can get it on for a small debit or even a net credit or zero, I'm good with that as well. I do think that we could see that, but don't get fooled necessarily by bounces here. I would like to see that articulation lower. For me, it's not really down just enough. We'd at least like to see the 200 MA, which had been support, which is currently 175.17 and rising, and that, of course, lines up with that 12-9 gap fill. Gold has been bullish. We have been bullish on gold. We are looking for the 2 times range at 274.78, which is, of course, the 2 times range of the failed head and shoulders. If we were to use the right shoulder, which is the more extreme of the two, that 2 times range would be closer to 279.29. So if you're in calls, you could use either of those strikes as spreads. If you want to layer it out, going longer dated, let's say you're long a couple of hundred shares, sell 1 at the lower strike and 1 at the higher strike. If you want to do share enhancement, buy 1 and then sell 2 on the upside, using your shares as the hedge against the overwrite on the call. Bitcoin's still below some key levels for us. We need to see it, I think, at least over the 99,838 50% fib, using the 113 low and the 121 high. But I'm a tougher grader, as you know, and I need to see it at least over 100,000 and really over 109.03, which is the 20 MA. Anything below there to me is just conversation. I'd be interested in buying the dip on a larger liquidation break, but we have not seen it as of yet. Robinhood, we've been bullish on. We were looking for the pop into the earnings. We got it. I do think that we could see some resistance in 66.50 to 68.27 level, which is, of course, the 78.6 of the range. I ultimately do think this will get back up to the 85s and maybe even run for a hundo. But if Bitcoin starts lagging or if we start getting market corrections, these brokers trade on volume. And if we're not seeing that, that could be problematic. But generally, I do like this stock and I would be a buyer on dips. Interest rates are causing some troubles. We are down quite a ways here in TLT. Bulls will need to get over 87.60 for a higher low. I'd feel better over the 20 MA and even still better over the 50 MA at 88.64. Remember, we had talked about rolling down some of those higher strikes from the 100 to 95, so now I'm long the 90-95 call spread and short the 85-80 put spreads. I don't necessarily think this is going to work right away. It doesn't really have to, in my view. I do love that I was able to soak up a lot of the premium on those short 100 calls and have reduced my cost of the trade to very little. The only problem I would have is if it really starts dumping lower through my lower strike of the 85s. But, you know, I think 87s, 85s, and 82s are the key support levels. The dollar has been cooperative, but we are on the triangle low. Bulls need to hold 107.587. Anything below there gets iffy. I'd feel better long over this, over at least the 20 MA at 108.099, and really on a break of the trend, which would take us up over, if it happened tomorrow, 108.46. Generally speaking, I think the markets are hypersensitive here to headlines now that we're through the thick of earnings season. I do think that there is going to be an end to the Ukraine war. I do think that that is going to weigh on energy and energy stocks. I've talked about that as soon as the midweek video last night. I ultimately do think that this will be a deflationary tailwind, which will help markets. It will not fully filter in right away, but if people are paying less for heating, cooling, and driving, and that filters through the economy, because you'd be shocked. Oil is pretty much in everything. Think plastics, think transportation. Do a Google search, you'll see what I'm talking about. Anyhow, I like using key pass-don't pass lines, particularly that 6100 in the ES. If we're above there, I feel better about markets overall. If we're below there, I still think it's choppy with liquidation break potential. Like and follow for more.